You look at Bitcoin, you can see how it's gone completely parabolic. It is in bubble territory. What goes straight up at any point can come straight back down. But overall, silver could do the same type of thing. Silver has done this. It's flagging sideways. It's in a bull market. And if it gets some traction, I think it could start to do this type of move.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah.
Definitely. It's great to have you. And our last interview was extremely popular. You were talking about how silver, it seems like in the next couple months, is ready to break out and head towards 40 or even higher. Can you give us an update on that based on, the price action we've seen in the month since we've had you on?
Sure. Yeah. Okay. Well, let me pull my chart up real quick and we get a sneak peek here at what the charts are showing. And I'll go to the silver continuous contract. Now we take a look at silver here. Silver's been in this multi-year base. Obviously, it broke out last year, had this huge run. If we look at silver in the pattern here, this is the weekly chart. It's got a very strong pattern that's pointing to a lot higher prices going forward. Right now, it is actually still in an uptrend. If we were to try and define here, we've got a series of higher lows. We've got a series of higher highs. And that is the definition of an uptrend. So right now it's kind of trading down near the lower end of this range, trying to find support. And we've got a defined kind of resistance level across this area, which you can argue here, this is like a pennant formation, a bull flag pattern. Ideally, it stays above this lower blue line. And then we should see it get squeezed up here and eventually break to the upside. And we could see a pretty substantial run. Now, I like silver because it's really mainstream media right now. Everybody's kind of watching it. I think when it starts to break out of this big, more or less almost a year-long pattern by the time it breaks out probably, it's going to have a lot of power. The bigger the pattern, the longer it takes, the bigger the move it's going to make usually after that. So I think there's going to be a lot of upside potential. We've never seen silver on a weekly basis close above 27.70. Right along this line right here. It's pierced it a bunch of times, always sold back down by the end of the week. So if we can close above 27.70, that'll be like a sign where, hey guys, get ready because this is, prepping to have a breakout. And when we break and close above 30, then we're probably off to like 38, 40 something and change. And maybe we see that short squeeze that, the world's trying to put on the silver market, which would be great. If we do look at the shorter term chart of silver, you know what? Let me give you a quick upside target using Fibonacci extensions. I use this for finding targets and support and resistance levels. Just based off this low that we saw in 2020, the pullback that we saw last year, and where it is likely headed next, let's just squeeze this chart down. The next stop is going to be roughly $40 an ounce, which is really exciting. That is kind of what the big picture as an investor, that's kind of what we're looking for. If it hits $40 an ounce, that's a pretty major level that, it's actually a place where you could be pulling some money off the table. If it hits that level, we're most likely going to see some pullback in a consolidation that lasts potentially a year or so longer. This is a long-term pattern. Each pattern here takes a year or two to unfold. So if you hit that target, you could always, be actively managing those, looking for what precious metals might be the next. Because silver, when it hits resistance, well, it might actually be a perfect time to move into gold. Gold could be breaking out, or platinum, or palladium. So the nice thing is you can rotate from metal to metal when these major levels are hit. Now, we'll just quickly look at the daily chart real quick so you can get a view of the short-term price action. If you look at the short-term price action of silver, we actually have a bit of a bearish pattern. It is trying to hold support here, but the general trend at this point is kind of to the downside. We've had a strong sell-off, and then it's kind of created this bear flag formation, and using Fibonacci extension, we can get an idea of where the downside target will be. So silver is flirting with this 618 level, and typically when it hits this 618 level, this is kind of based off just pure momentum of the price. It's usually going to come down and hit the 100%, this green line, 100% measured move. So we got to be aware that we could see silver flush down to 24. Believe it or not, it'll actually be a really good sign. I think you and I might have even talked about this level last time, that if it can get down here, that's going to be a strong support level. It's a low over here, big consolidation. It's a complete measured move. And from the long-term standpoint, it'll be like an extreme support level to accumulate. And from there, it should put in a violent bottom and hopefully rally. So I like silver. Short term, it's got a little bit of weakness, but long term, this is something that's really exciting. I'd say by the end of this year, we're hitting $40 an ounce or higher.
You mentioned how, silver could hit $40 this year. You've also mentioned how silver is a bit unpredictable. It could even go higher than that. And when something goes just straight up, have some caution, right? And realize that it's a wild ride. It can come straight down again.
Yeah, to touch on that point, yeah, if you look at Bitcoin, for example, this will play into silver, but you look at Bitcoin, we look at the weekly chart, and you can see how it's gone completely parabolic. It is in bubble territory. What goes straight up at any point can come straight back down. I've got an upside target of Bitcoin around 73 for the next kind of major peak. If it can get up there, where there's going to be a violent pullback, most likely. But overall, silver could do the same type of thing. And that's what I think could happen this year or next year for silver. As silver starts to break out, the silver's doing one of these. If we look at it's kind of condensed because of the way the prices move, but silver has done this. It's flagging sideways. It's in a bull market. And if it gets some traction, I think it could start to do this type of move where everyone piles in, it goes ballistic. It just keeps going up and up and up and up with some really wild rides along the way. And as you said, when you hit certain measured moves like $40, I think the next one's like 52 and 87. If we were to fly up and hit those levels, you'd be wanting to pull some money off the table or moving your protective stops up because the market can crash so violently. But it's very important. I mean, trading, even investing, it's all position management. You got to know when to step aside, when to, enjoy your profits and lock them in versus just sit in it forever and ride that roller coaster.
It's so interesting also because you give us also the short term and the long term. So short term, a little bit bearish, but longer term, couple months, very bullish for silver. If we look at gold, what do we see? Because I know there's some people saying, that gold could go back above 2000 and much more this year. If we look at what Deutsche Bank is saying, for example, they're looking for a pullback around 1500. So what are you seeing in the gold market right now, kind of short and long term?
Right. So I like gold a lot. I think the pattern it has is very, very telling that it's right now it's oversold. I think there's still a little bit of downside potential for gold. I think we could see it go down to 1650 or 1600. That would be like a washout low. People are going to panic. If it hits those levels, then we're kind of primed and ready for this market to put in a massive reversal. I think gold could go the other way. Now, when we look at gold, this is the weekly chart. We can get an idea of this first major bull market run where it kind of went up and hit all-time highs. If we use a Fibonacci retracement, which tells us a level where price should typically retrace, pull back from. Typically, for a trade, we're looking for something to pull back in this zone, this 38% pullback to this 50% pullback. And as you can see, gold is in that kind of that perfect box where if you're an investor, this is a prime time to get into gold. You're buying it on an oversold condition. You're buying it at a measured move where typically a pullback ends and it finds a bottom. It's, everything is kind of lining up. We're in this massive move. It's a big bull flag. And if we were to do the opposite of a retracement, we do a Fibonacci extension, we can get an idea of where this move could go if you were to buy right here to the upside. I'll have to squish this chart down to see it. But the next run for gold, I got a pencil, would be all the way up for 2250. It should have a hiccup there of some sort. If it does have a hiccup there, we should go all the way up to the 2600 level. So you can see this pattern. It's just a big rally. It's at a perfect pullback, and the second half of that move should head its way higher. Now, this this kind of consolidation around the 618 is something that we see very often. You'll see some type of consolidation. Like here, you'd have a full move, a pullback. You'd have the second half of that move. I mean, the market's set with these waves of bull flags. And so this is a major bull flag. This is a major pullback. And this would be the next major high. So 2,600, really excited for gold to break above these yellow lines. And if we were to zoom in on the shorter term price action, these yellow lines are really critical. They're resistance areas based off a couple different levels. If we were to look at these wick highs, that's the major kind of maximum resistance falling trend line. I like to go off a closing price. Closing price is the most important price because that is, by the end of the week, where do investors and big money management people, where they're comfortable owning it. So you want to usually use the closing price for your trend lines, which puts us somewhere around $1,800 an ounce. So I think we could see gold potentially work itself up. Eventually, it's going to have to break this yellow line, and that'll be probably around the 1,800 level. So when gold breaks 1,800, this first yellow resistance line, I think that's going to be the start of something really exciting. But gold still has some downside potential. Again, I think it could still go down to 1,650, potentially have some washout spike low at 1,600, and then reverse to the upside. But long term, it's got a very beautiful chart.
Now, I know you've also stated that for the next year or so, you're bullish on the dollar. So how does that fit in with being bullish on gold and silver long term as well?
All right, so taking a look at the UUP, this is supposed to mimic the US dollar. It doesn't go back far enough to see where price was. The US dollar used to continue to go way up here. But if we just look at this price action, the US dollar is at a really major pivot point in price, right across here. And then we've got the next major pivot area somewhere right up here. So it's obviously at the lower end of the range. I think it could actually continue to strengthen and move up. I think it could be seen as a safe haven going forward. If the dollar goes up, I mean, we've actually seen it quite a bit where the dollar moves up and gold keeps moving up. There's been a really big disconnect over the last year between gold and the dollar. I almost don't really look at them. I used to look at them every day. If dollar's up, gold's down, but it's not like that anymore. There's definitely a little bit of a disconnect there. But I do feel as though the dollar is telling us when there's actually real fear in the market. When globally everyone is nervous, they tend to move into the US dollar, and we see the dollar go up. And when the whole globe is also nervous, they tend to move to what they think is a safe haven, and they naturally want to go to gold. And so we can see both of these somewhat move up together in sync, and both of them seen as a safe haven play. Obviously, the dollar going up will put a little bit of pressure on gold, but they can rise together. We've seen this happen many times in the past, and they could both be seen as that safe haven. If the dollar breaks below this blue area here, then it's going to have a really big drop. It's going to have a significant decline. And that would be the start, I think, of a super precious metals commodity run, which I've talked about in the past, that we're really on the infancy stage of a 10 or 15 year super bull market for precious metals and commodities in general. You look at the value of commodities versus the value of equities and real estate. Commodities are, they're like at 100-year lows when you compare them to the values of the stock market and housing prices. We saw this back in 2000, 2003. And we know what gold happened back then, put in a major bottom, and gold put in this huge mega rally for 10 years. And that's what is setting up again. So these charts I showed you for gold and silver, those first targets, those are just the second half of the first wave. There can be 5 waves, depending on the type of analysis you use. Elliott wave theory, you could have all kinds of waves that could take gold and silver to ridiculous, amazing levels. But you really, as a technical analyst, I don't really predict and go that far out. I mean, people love to hear it, but you can't really, it's too far out. So I just go one bar at a time, 1 week at a time, and analyze and follow price with our money. And I don't really try to predict and outsmart it with my money. I just follow the trends.
And one of these shifts we're seeing in trends right now is really a shift in leading sectors. If you can expand on that with respect to the stock market.
Sure, yeah. So let's take a look at the NASDAQ here, the daily chart. And if we take a look, the NASDAQ in the last month and change has fallen about 12%. It's had a rebound back up. And the NASDAQ was the major leader last year. We saw technology, biotech, the EV, the electrical vehicle market, solar, clean energy. I mean, all that was kind of piled into the NASDAQ, really muscled its way higher, had a huge move. But now we're seeing this huge unwinding of everyone moving out of those leading sectors. And now they're all piling into the complete opposite spectrum of stocks. They're all piling into, this is the small cap sector. It has been going up and been on fire the last couple of months, really outperforming the NASDAQ. And so has the Dow Jones. And what these two stock indexes represent, I mean, the Dow's had this massive run while the NASDAQ's had a big pullback. And there's the big shift between everyone wanting into technology, biotech, solar, all the high flying stocks. Money's really coming out of those. We are seeing increased volume. Money's getting pulled out of those sectors. And now they're going into the other side. We haven't really seen any action in a long time, which are financials, the industrial sector, even retail's really coming back. Retail sector. I mean, we're seeing some pretty interesting moves across the board. And it's funny because last year was all about these really new, cool companies and technology and all that stuff. And this year we're like going back to like the basics, industrials, banks, financials, real estate sectors on fire. So there's this big shift in mindset that people now are focusing on. They're saying, hey, I think the economy is kind of coming back. We're working through COVID. People are now investing in the future of America and companies. So they're going into stocks that are undervalued. They want to get back into industrials. We're going to start ramping up production. We're getting back. So people are investing in those. They're forgetting about the tech. They think the tech is kind of done for this point. And so we're seeing everybody move to these industrial kind of economic stocks, and people that tells me people are very comfortable and confident about the future, which is great, really.
Do you think this shift is related at all to the coming shift you see into commodities?
I think we're going to see a time when commodities are going to shine. I mean, we tend to see commodities shine near the end of a stock market bull market. And we're still in a stock market bull market. We're still raging. It's still going up and up and up. There will be a time when stocks become more unstable. We're going to see more sector rotation. Like right now, we're seeing sector rotation from the pocket of hot stocks to a whole new pocket. But there's going to be a time when there's going to be a lot of mixed signals. There's going to be random hot sectors kind of everywhere. And when things get really random and choppy, that's usually when big money investors can say, hey, there's a lot of uncertainty. No one really knows which direction to run. Do we go left? Do we go right? To the different kind of types of stocks. And that's when commodities actually, I find, start to do well. Utilities should start to do well as a play there. People become defensive. They want to get into utilities, high dividend paying. So when we see utilities take off, dividend paying stocks start to pick up and lead the way. That's when we're probably going to start to see commodities as well start to pick up traction. That's when gold, silver, and gold miners will usually take the lead and dramatically leave the stock market behind. And we haven't seen that. We're still, if anything, it'll happen near the end of this year. But we'll just take it again 1 week at a time for these major trends to take place. But it's going to be a great year. There's lots of rotation. Rotation's good. It's what creates opportunity. So the more things are sloshing around in this market, the better it is for trading sectors and commodities. And we just need the precious metals market to find a bottom. And when it starts that new leg higher, it's going to be a lot of fun. There's going to be months of active trading and watching investments grow. So it should be good.
Definitely. Well, Chris, thank you so much for your time today. For all the viewers, if you want to keep hearing these interviews, hit the subscribe button, hit the bell icon, comment below what you think. Could silver approach $40 this year or even in the next few months? Comment below what you think. Hit the like button. And Chris, before we let you go, where can people find you and any last thoughts you'd like to add?
Sure. Yeah, they can. I've got a blog at thetechnicaltraders.com, and there I post daily reports and trade ideas on the markets, what's going on. I cover precious metals every day for our subscribers. It's a pretty big part of the analysis because it's a pretty interesting time. I think metals are going to be really big. But if you'll go to the website, go to the free research page. There's lots of free analysis. And on my website, I'm teaching a webinar right now on how to trade a band trading strategy, how to find the best asset right now for very quick gains. It's a free strategy. So people can go there and watch that and take advantage of the markets with low volatility, but be able to turn some pretty big profits. So it's exciting times.
Chris Vermeulen from thetechnicaltraders.com. Thank you so much for your time today, and God bless.
Thanks, Elijah. Take care.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.